Hi, Todd VanDenburg here with VanDenburg Capital Management and another Uncommon Sense update. So since our last update, we've had the market trading in a relatively narrow range. It gets, the Dow gets to like 34.3, 34.4, and then it drops down a little bit, but then it pops back up to 34.3-ish. So we're trading in a range, and that has to do with there's really uncertainty about, how far have we come back? How much more room do we have to come back? How much more economic activity might be generated as a result of the reopening that's happening all over the country? And so what I want to talk about today is some of that data that might be a little misleading, and then other data that gives me room for optimism that there's still plenty of room, for expansion and growth in economic activity. So let's start with retail sales data. If you look at 2021's retail sales data, it is off the charts. It's better than it was pre-pandemic. But there's a reason for that. And so this data is misleading because retail sales are off the charts, I believe, because of all of the money, the stimulus that's been, doled out by the US government. It's creating a situation where people are spending money that they didn't necessarily have before. And that's why we think that the retail sales data is looking so amazing compared to pre-pandemic. But when you take a step back from that and you look at something like initial jobless claims or continuing jobless claims, there you see that the data, it's showing that we're not quite back in that area to pre-pandemic levels. We've seen significant improvement, but we're not quite back to pre-pandemic levels. So if you step back even further from that and you look at, okay, what's some data that would show that people are sort of getting back to normal? And we look at things like commercial airline flights, the number of people passing through TSA checkpoints, hotel occupancy. Those are all really great indicators that people have said, okay, maybe things are well enough now for us to sort of try to get back on with our normal lives. And when you look at those things like commercial airline flights, TSA checkpoint data, and hotel occupancy, you see that for the most part, people really haven't sort of gotten back to normal. And when they do, that's going to generate even more economic activity. Now, there is one piece of data that we look at, and that's like box office receipts. I don't have a chart for that right now, but at the bottom of the pandemic, the box office receipts had fallen something like 95%, 98%. I'm actually shocked that it wasn't 100%. I guess there must have been a couple of movie theaters that decided to stay open. But box office receipts have been down substantially, and they are still down, substantially. I mean, yes, theaters are opening up, but they're still keeping a lot of separation. Not a lot of people are going. And so we're watching that data pretty closely, because things like that when we have data that was pre-pandemic and we're substantially off of those levels, pre-pandemic levels, that shows that there's a lot of room for improvement, and that room for improvement is economic activity. So as we start looking for the rest of the year, we're following some of these things again, like airline flights and hotel occupancy, as a way to go, okay, if those trend lines continue to go more towards the pre-pandemic levels, then we have pretty much confidence that the rest of the year should be okay for the markets. Will there be volatility? Absolutely. But the data is showing us that there still is plenty of room in this recovery to increase economic activity and to bring things not just back to where they were pre-pandemic, but significantly above them. Because the country has changed since the pandemic. I mean, more and more people able to work from home and not having to incur the expenses, all the travel expenses to work in the office. And that gives them additional discretionary income that they can use to buy stuff. So we see this continued expansion at least through the end of the year, potentially into 2022. And as long as companies continue to increase their ability to deliver products and services, we shouldn't see inflation go completely crazy, it should come back down to where it was, pre-pandemic in the 2%-ish range or below. And so this is the kind of data we're looking at, and we think you should be looking at it too. It's really important. The media is going to feed you a headline to scare you, and one of those things that they might feed you is, has the recovery run out of steam? And looking at the data that we're showing you, it shows that it hasn't run out of steam. There's still plenty of room to go. If you have any questions about this or any other financial matter, please send me a message, respond to this update. I'm happy to answer any questions you might have. If you're willing to ask it, I'm willing to answer it. So that was your update. I hope you enjoyed it. If you did, give us a like, give us a share, and I'll be back again soon with another Uncommon Sense update. Thanks for watching. If you'd like to be the first to hear of more Uncommon Sense updates like these, please click the subscribe button below. We'd really appreciate it. Thanks again.